Well, we all know that the FMCG leaders have really underperformed in the last many years. In this raging bull market, they've not done well, and they've struggled with growth as well because of various reasons, including disruptions as well. But the big question is the tide turning for the FMCG sector finally? I'll come to that. Why I'm saying there could be a turn in tide as well. But first, the key numbers on how they've underperformed massively in the last 5 years. This is quite stark, right? Most of the FMCG leaders have massively underperformed in the last 5 years of this raging bull market. The first sets of underperformance will come up on the screen, which includes the likes of Bajaj Consumer, Dabur, HUL, and these are the 4-5 names. Now, this is a 5-year return CAGR. HUL is flat in the last 5 years, and Dabur has actually given negative 2% returns in the last 5 years. So these are the first bunch of companies, stocks which have underperformed. But this is marked by equally the weak earnings as well, or the revenue or profit CAGR as well. Look at Bajaj Consumer, or for that matter, Dabur and HUL. Mid-single-digit growth for both Dabur and HUL over the last 5 years in terms of revenue CAGR, operating profit CAGR, as well as net profit CAGR. So they've actually not done well in terms of numbers as well in the last 5 years. This is the first bucket which has really underperformed. The second set of stocks will be the stocks where you've seen marginal outperformance, but again, in the context of the market, they've underperformed. Colgate, GCPL, United Breweries, Tata Consumers, Britannia, Marico, all have actually done 9 to 12% returns over the last 5 years. I'm talking about 5-year CAGR returns for this company. So again, massively underperform in the context of the way the markets have done in the last 4-5 years. Even here, the story is quite similar. You will see a lot of companies have actually reported very muted growth over the last 5 years in terms of profit, in terms of operating profit, as well as in terms of revenue as well. ITC, United Brew, at least those stocks have underperformed. Now this is the pack which has relatively outperformed. So there has been a few outperformers as well in the FMCG basket, and that's largely the sin stocks. What I mean is the likes of ITC, United Spirits, Global Spirits, Cupid, Tilak Nagar, all have done well in the last 5 years, especially, and here it is backed by earnings growth as well. Look at something like a Radico Khaitan, double-digit growth there. Godfrey Philip, double-digit growth there. So is the case with Tilak Nagar Industries. They've done phenomenally well in terms of numbers. So, as I said, FMCG as a sector has been very selective, but large part of the basket has really underperformed big time versus the market. Now is the tide turning, and that's when potentially from here on what's to watch out for. The big thing is the GST rate rationalizations. That could be a big trigger for the FMCG sector to watch out for. So that's the first reason why I'm saying just watch out for some potential tailwinds. The second is a good monsoon, which typically is good news for second half for these FMCG companies. The third reason is the government focus now finally shifting from capex to consumption. This was a big focus thrust in this budget, so that's something to watch out for. And of course, last but not the least, the income tax cut again is aimed to boost consumption, which might see in the second half of this year. So there are a few tailwinds to watch out for, but the bottom line is in the last 5 years, FMCG sector has really underperformed, and the big leaders have actually not done well. In fact, they've given negative returns over the last 5 years compared to the big bull market that we've seen in the Nifty.